Oh man, this is starting to feel like that S&P sell-off we were talking about. It came sooner. It always comes sooner than you think. Yeah. Let's take a look at the madness that's going on in the markets, because it's another ouchie wouchy day here. All right, let's go ahead and pull it up. Let's see what's going on. All right, let's figure this out. We actually got Dogecoin up at 49 now. So Dogecoin's up a little bit. So let's see what we got. All right, so we're gonna pull pre-market here, and let's see what we have. So in the pre-market, we have let's sort by losers here. Oh, wow, wait a minute. Everything is red. Literally everything. What? Hold on. Yeah, okay, there we go. So on the all stocks, we have like a third of our page that's green. Usually on Webull, we have like 2 or 3 pages of green, and 2 or 3 pages, 4 pages of red. No, we have 7 stocks that are green. Ubiquity by 3%, Purple by 3%, AMC by 1.6, Roblox by 1.5, Carol's, Newell, and Win by fractions. Literally everything else is just gone. Yeah, is my monitor broken? I think the color green is missing. It's pretty bad. No, it's pretty bad. This is the HE double hockey sticks that you want to be aware of. I think you are aware of now, but this is literally that potential S&P sell-off that we've been talking about for the last couple weeks. That it's not just going to be tech and consumer discretionaries anymore, but you cannot have. We talked about this. You can't have tech and consumer discretionaries plummet and everything else moon. It does not work. It rubber bands back down. And that's literally what's happening here. Now we're starting to get the rubber band back down. But it's the recovery that's going to be interesting. It's going to be when everything sells back down to a lower level, what's going to recover first? My expectation is tech and consumer discretionaries. We don't know. We'll see. But this also, I don't think is short term. This is pain leading up to CPI data tomorrow. This is freak out with the pipeline from yesterday, freak out over cyber risk, freak out over the fact that we got Biden printing more money, the Fed wanting to print more money, and really inflation expectations going up at the same time. So let's take a look at how bad some of this is in the red. Let's sort by red. So Vuzi's down 20%. Virgin Galactic's down 18.5% in the pre-market. PaySafe is down 18%. There's Marathon and Riot always hanging out together, down 12.5%. You've got Workhorse down 10%, Open Door 10%, BNGO's down 10%, QuantumScape, Fubu, SOS, Arrival, EXPI, Blink, Golden Nugget, Genius Pants, all between 9 to 10% down. MP Materials down 8.5%. My goodness, these are massive numbers here. Second day in a row, mind you. And well, 3 months in a row. Microvision, where is it? There's Enphase. Look at Enphase. 109. Upwork, $35. You've got what else do we have here? Xpeng. Wow, it keeps bouncing around. Xpeng down 7.36. Palantir down golly, where is it? Palantir down 17.2 right here. That's down almost 7%. Canoe's down. Arcimoto down. I drove an Arcimoto yesterday. It was fun. Tesla, 591. Oh my goodness. Redfin's almost under 50. Lemonade's at 66. Solar Edge down 5%. Etsy's down at 158. Pinterest is down. Square's down to 205. Almost down to that. We hit a low of 190 at Square the other day. Piton's down. Well, Piton's kind of been sitting at 83 for a while, so that's almost not even that much of a surprise. But wow. Look at this. Now you got the recovery over here as well. There's your Delta, your Apple. Well, Apple's not really recovery, but you've got Delta down about 2.88%. National Beverage, eBay, these guys 2.5%. Booking Holdings 2.3%. Whirlpool's down about 2%. Cheesecake, Ford, Macy's, Darden, these guys down about 1.75%. Target's down 1%. Everything's down. What's getting hit the least, though, are things like the stores. Home Depot, Walmart. These guys actually still doing pretty decently. Let's take a look here, though, at what we got over here. Let's listen in.
And we have to distinguish between sort of those A malls that have been able to maintain and a lot of the others that haven't.
All you need to do is look at the real estate investment trusts that are trading at ridiculously low prices. Those are ones that do not have A malls.
Yeah.
And David bought a bunch of, you know, he bought Talbot. That was almost all A malls.
Right.
Paid a little too much and then got that adjusted.
Then got it adjusted.
Speaking of
deals that didn't happen, I do want to talk about L Brands. We're going to get to that when we get to an opening bell as well. Just a few minutes away. Don't go anywhere.
Wow. All right. Well, they're off. Let's lower that. I do want to hear what some of the others are saying before we get into the open here. And I'm going to pull up Bloomberg Live too. Bloomberg Live. Okay, another TV commercial. Perfect. Okay, well, fine. Let's get Bloomberg up. We got 4 minutes to the opening bell, and it's pretty kooky out here. We've got, keep in mind, we did also get Tesla shares down off of the Chinese Passenger Car Association saying Tuesday that Tesla sold 25,845 locally made vehicles in April, a 27% drop from March. Reuters reported separately that the Model 3 maker decided against acquiring more land next to its Shanghai plant as U.S.-China trade tensions undercut plans to turn the site into an export hub. Ooh, not so good. While Musk has been playing damage control during what has been a turbulent few months in China, he's also been preoccupied with Dogecoin. Oh my goodness. The suggestion here in the article is hilarious. Tesla's issues in China started in March when EVs were prohibited from some military complexes and housing because of concerns over sensitive data collected by the cameras. Shortly after the ban became public, Musk said during a virtual appearance at a conference in China, the automaker would never use its own technology for spying, so on and so forth. Then you had the protest, you had the crash in Texas, and a lot of negativity. Let's listen into the futures here.
Down off 255 on the NASDAQ, the Dow off 300 points. And take a look at the big tech stocks, if you like, Apple, Amazon, Facebook, Alphabet / Google, Microsoft, all down 1-2%, Apple down close to 3%. Let's bring in David Nicholas, why don't we? David, give me some cause for soothing and calm. You think, though, that this sell-off is far from over. I don't like to hear that.
Well, I wish I had some short-term good news for you. Long-term, we're going to be fine, but short-term, there still could be some pain. I mean, obviously, the markets, especially the tech sector, is just reeling from the pain of inflation. We saw the 5-year break-even number come out recently, 2.71%. That number is the highest it's been in over a decade. If you saw when Janet Yellen came out last week and simply said that the Feds may need to raise rates so that the economy doesn't overheat, what did the markets do? The markets went bonkers. Janet Yellen proved that the market cannot handle the truth about inflation. So we really see this tug and pull between the Dow and the NASDAQ. The Dow is an index of stocks that is benefiting from inflation. The NASDAQ is a group of stocks that's being hurt by inflation. So you see where money's going. It's going into the Dow. It's coming out of the NASDAQ. I think we'll see that trend continue over the next couple of weeks.
All right, I'll take your case. Now, earlier I had a guest who said, don't play Coinbase, go with the actual coin itself, go with Bitcoin. But you say Coinbase is a safer way to play the crypto trade, right?
Well, it is. I mean, if you can tell me a cryptocurrency that actually has earnings, maybe I'll change my mind. Coinbase is a company that has actual earnings. If we go back to a normal sense of valuing a company based on the profit every year, it does make a lot of sense. I think it's a safer way to play. Cryptocurrency is not going away. It's only going to get more popular. A company like Coinbase is a direct beneficiary of that. Their user growth, I think, is going to continue to grow. Our clients own the stock. We bought more on the pullback last week. If it gets back up to its IPO price around $400 a share, that could be significant upside from where it's trading today. So for me, I like it.
We're getting it here.
Earnings. Call me crazy, Ashley.
We're doing the Fox Bell today.
It has growth prospects.
I would never do that. All right, never do that, David. I understand. And bonkers is a very technical term. I'm glad you used that. All right, let's take a look. The market is open and already red.
All right, let's give CNBC a look. I want to see, what do we get over here? There we go. Look at that heat map. That's what I was hoping they would still have up, the heat map. Oh, goodness gracious. That is pretty beautifully red. Oh, ooh. So, okay. I before we look at the sticks again, I want to reiterate that I think this S&P sell-off that we're going to see is going to continue to not only extend to the broader markets, it'll hurt tech more, of course, but I do believe there's a good likelihood it will actually see a correction in the S&P 500. And I think at some point, and I don't know this obviously, but I think at some point there's a chance we'll even see the crypto market sell down after the S&P sell-off begins. The reason I say that is, well, I'll show you here. The S&P has hit nothing but record highs, and the dip that we're seeing now in the S&P 500, it's been 1% 2 days in a row. It's a drop in the bucket. Otherwise, we've been hitting record high, record high, record high, record high at the S&P 500. To me, it just wouldn't surprise me to see us go back to potentially November levels on an extreme point to sort of align with the crash that we've seen in tech and consumer discretionary, though I think tech and consumer discretionary could sell off even more. So it wouldn't surprise me, and we mentioned this last week, wouldn't surprise me to see Dow 3,700, Dow 3,500, maybe even Dow 32, something like that, to where we do have, a 10, what would that be? It'd be like an 18 to 22% correction on the S&P 500. Would not shock me. I would just be prepared for that. That's all. I hope it doesn't happen, obviously. I'm not trying to be soothsayer or whatever. But my belief is if that happens, it wouldn't surprise me to also see a sell-off in cryptos. We don't know. As people rotate and sort of balance out again. And that's because if you've got a big crypto portfolio that's been kicking butt, as a lot of even institutional investors have, people might be interested in taking that money, moving it over to now substantially lower price stocks, and basically going shopping at November, October levels again. Wouldn't surprise me. So it's a consideration to be watchful of. Okay, let's go ahead and take a peek at what the sticks themselves are actually doing here. All right, let's see here. So what do we have? All right, let's pull up the, okay, so we have a little bit more green right now. We have purple and Roblox running. Roblox running after earnings yesterday, doing very well yesterday. So Roblox has got the nice green candlesticks. And Purple Innovation has got a nice green candle coming here. Dogecoin's up to about 48. Nice, it's up about that 3% over the last 24 here. BTX momentum kind of up a tiny little bit here. Ethereum at that 39.29. Then we do have AMC trader stock up about 1.85. Then Nike, Walgreens, these guys barely up right here, but they're flat. I'd rather be flat than down, obviously, right? So we do have CPI data coming out tomorrow. Yep. Let's jump back to see what the let's see here. Let's jump back over to see what we've got over here. All right. Sorry, I'm trying to sort by losers here. There we go. Okay, so PaySafe actually recovering a little bit, I feel like. Oh, wait, no, I can't tell. I thought it was down more in the pre-market. No, maybe this is about what it was down, 18.5%. Virgin Galactic down about 12.5 here. Vuzi 13.4. Affirms down 13, or what do we got here? 12, 13. Arcturus is down. Marathon and Riot down. Playboy down 9.9%. I wonder how this is looking on the day chart. On the day chart, Playboy is still looking pretty good. But keep in mind, with tech and SPACs, we really expect, mostly with SPACs, we really expect to see kind of that momentum run up and then that sort of reversion back to that lower, like that $10 to $20 range. Not always, but it's just something to be aware of. I mean, QuantumScape was a SPAC, and it didn't go back to $10, but it certainly did start deflating substantially from those insanes of like $130 that it hit. It was just absolutely incredible, some of the runs we had here. But anyway, lots of air being let out over here, and we've got Tesla, not as bad as it was in pre-market. Yeah, Tesla did try to recover right there during the market open a bit, but now we see it falling a little bit again. Mind Medicine down as well. Xpeng down as well. Beyond Meat's almost down under 100. Churchill Capital, Simon Property Group, Lemonade, all these guys down about 3.75 to 4.25. Wayfair, Neo, Palantir, these guys all experiencing some pain. All right, let's listen in here for a moment. Talk about this tech tumble here. Let's listen in.
What's doing so badly? What happened?
People started to buy more stuff. What can I tell you?
Lingerie?
Yeah.
How does that have to do with the closing and opening? Well,
and a lot
they
more.
solved the pandemic. Let's get lingerie.
We know the Bath and Body Works part of it.
Don't you use more lingerie during a pandemic than after pandemic?
Home. Yeah. But I'm just checking my numbers here. Yeah, 245 million of Victoria's Secret for this quarter. Again, fourth quarter strong. So my point is, Sycamore, I mean, the number, what they lost out on, being able to buy 55% of this company for $525 million. It has now a $19 billion market value overall, and Victoria's Secret alone has got to be valued at 8, 9. I don't even know what the billion-dollar number is. In 1 year, they would have had one of the greatest investments of all time if they had not.
Matthew Boss came out where they were buying it and said, J.P. Morgan, and said, you got to buy L Brands. And I was like, are you kidding me?
And shareholders are very happy that that deal was terminated. But wow, such an interesting sort of sense as to what's happened over this last year. The unexpected parts of it, as in L Brands going up over 400%, its business taking off like a rocket ship.
Yeah. David, there's not a lot of stocks that are up.
No, there aren't. No, there aren't.
I mean, I'm just calling it, but I want to tell you something.
T-Mobile's up.
It's early.
Okay.
It's early.
Why, you think we could turn today?
Yeah.
Bottom?
I think we could.
Yeah.
Got to see out the margin calls. Roblox is a company I have on tonight, and it's doing incredible.
I'm going to go ahead and pull off the coverage here, mostly just chatting here. So what I'm going to do now is we're going to pull up and we're going to see what's going on with the 10-year Treasury. We're going to see what's going on with inflation expectations. We know the inflation expectations are way up. What's also very interesting, folks, is Kathy Wood used to get like 1 million views on her channel when she was like the queen. It was like Kathy could do no wrong. Kathy's strategies are the best. Everybody was loving Kathy Wood, right? Her last video posted on Friday, which by now would have usually gotten, I don't know, 800,000 views, 600,000 views, something like that. 154,000 views. Yeah. Like, and it's even got stimulus in the title. Yeah. It kind of just goes to show this sort of like removal from favor that we're seeing. Let's look at the outflows over at ARK. In fact, let's start with outflows from ARK, because ARK, it's basically the easiest way to describe this sell-off. And it's not to bag on Kathy at all. I love her strategies personally. But it's almost like an ARK sell-off. All right, let's pull it up. So let's do RK flow. Let's see what we have. All right, here we go. And then we'll grab the 10-year as well. Here we go. So it's actually incredible. It hasn't been as bad as it could be. It's certainly way worse than it has been, in really the 8 months prior. But you can see in the last 4 months, any sort of dip down below this line where my mouse is right here is an outflow from Kathy's fund. You've had quite a few periods here of outflows. Should have a nice inflow spike here, though. You have to say that's not bad. Nice inflow spike here on what looks like Thursday, followed by an outflow again on Monday. Oh, that was Friday. So Friday inflow, and then an outflow here. So okay, all right. Still seeing the crazy ups and downs here over at Kathy's fund in terms of flows. Let's also, though, look at the 10-year Treasury here. Yeah, look at that. 10-year Treasury jumping nicely here to 1.625%. Look at that open there on the 10-year Treasury. Nice bounce here. And this often aligns with inflation expectations. So the more pain we see over here, the more we see stocks, especially the tech sector, tend to sell off. Interestingly, tomorrow we do have CPI data. It's going to be a 5:30 a.m. release, which means I'm up real early. So stay tuned for that. We'll really be going deep into the inflation expectation numbers, or not expectation numbers. Tomorrow, the actual inflation data numbers come up via the CPI. Now, a lot of folks don't believe in the CPI. We talked about this yesterday. because it doesn't include things like housing or lumber or commodities, things that have all pretty much gone to the moon, right? Includes more things like grocery food and your cell phone bill and things like that. But it is a measure of inflation, and the market will be paying attention to that. So whether you like it or not, notwithstanding, the market will be looking at it. And so the two things would happen. Either tomorrow, the CPI data sort of pacifies the market's fear a little bit, or it exacerbates it. Let's take a look. Let's see if we can get the CBOE volatility. I want to see it here. Okay, CBOE vol. Oops, I spell it right, Kevin. Here we go. So, volatility is not showing yet. It takes about 15 minutes for volatility to show up, so no problem. But yeah, I would obviously expect. Oh well, I mean, you could already see the spike in the day. Look at that. I mean, that's up at least what is that? 10, 12%, probably around 12%, something like that. 1967. No, that might even be closer to like a 14% spike in the volatility index here. Usually, when you see these spikes, though, and I know it sounds like redundant. I know it sounds very redundant at this point. But usually when you see this needle go up nicely and you look into history, generally those are times that you almost want to be buying. Now, I'm adding, and I also know that's crazy. But take a look at how much the volatility index actually can move relative to what we've had. Of course, I don't expect to see some of this kind of madness, the March madness, right? But we could easily see a revisit to some of these levels right here, which pretty much we've hit about 3 times, which would be a run to about the mid 30s to about 40. Maybe we see like a September sell-off, which we have in the S&P as well, which hit us to about 33 on the fear index, volatility index here, right? We're still relatively low. I mean, look at that. We're at 22. So we've got a long way to go. I mean, really, the volatility index could easily go up at 50% still if this S&P sell-off continues. We'll see what happens. NASDAQ being down 1.36 right now. Let's go look at SPY, S&P. Let's grab the SPY just as an easy way to compare here on Webull. Yeah, the SPY is just down 1.12% here. I mean, in terms of the indices, this is still a drop in the bucket. This is still like a soft beginning for what could potentially happen with a real S&P sell-off. And the biggest ones getting spanked are the most momentum-based or the most or the ones with the least earnings and the highest earnings multiples out for the future. So, for example, Tesla has an earnings multiple of like 52 going out to 2024. Etsy and Nfib are like, I mean, today's pricing, they're probably at like 21, 22 or something like that. It's pretty low. However, Rocket Mortgage is at like 10 or 9, and even Rocket Mortgage is getting whacked today. But then again, Rocket Mortgage gets whacked for unique reasons. Rocket Mortgage, even though it seems so cheap fundamentally, Rocket Mortgage is just the child of, oh, well, interest rates are going up, so why would Rocket Mortgage benefit? In fact, a lot of your balance sheet is very sensitive to what interest rates do. So if we think there's going to be inflation, we think rates are going to go up. Well, that's just like saying you think Rocket Mortgage is going to get screwed. Now, if you think that interest rates would not go up, Rocket Mortgage is one of those where it's like, oh, you almost want to go shopping. All right, let's see here. Let's listen in for a moment here. See what we got on
It shifted from growth/tech to value, to industrials, to materials, to banks, to the reopening names. Speculative tech, the stuff we like to talk about, the Teledoc and the Zoom video and all the Cathie Wood stuff, has been hit very hard as rates have inched up a little bit, and there's been inflation fears. This has been a problem since February. So the higher rates and inflation kills those speculative names. None of the fundamental investors want to touch any of that stuff. So there's no one to sell to. They just go down. Mega cap's a little bit different. Fundamental investors still support them. The numbers are great. The PE multiples are not very high on them. And that's why they have held up. Mega cap tech has held up better than the rest of the market. You were talking about, Jim was talking about Tesla earlier. I just want to point out, Tesla was up 700% last year. Okay, so it's now 30% off of its 52-week high, but it's still not even at a low for the year yet. Fastly was up 300%. It's 70% off of its 52-week high. Peloton was up 400% last year, 50% off of its recent high. Zoom Video up 400. You get the point. There's a lot of companies that were up more than 100% last year, and they're the ones that are getting hit the most because they're generally more on the speculative technology side. If you look at thematic techs, everybody loves investing in Kathy Wood's ARCs and the 3D printing and the cloud computing.
Yeah.
Generally, thematic tech has taken a 20 to 30 to 35% haircut right across the board. Kathy Wood's a more speculative end things, but you can see everything is down in that technology area that everybody loved to talk about in 2020. Now, big cap tech has held up a lot better than any of this. And if you look at the big mega caps from where they were, the 52-week highs, this is pretty modest declines. And the reason is they have more fundamental support. They have more fundamental investors that are behind them, long-term people who like the story, who like the value associated with PE multiples are not terribly high on most of these, and they're supporting. At the same time, can I point out, there is a huge rotation going on. Yesterday at the close, we were at 52-week highs in many, many sectors of the S&P 500, including industrials, financials, materials, energy, healthcare, a whole bunch of the consumer staples as well were at 52-week highs, Carl. So let's remember, yes, tech's getting hit. Yes, speculative tech's getting hit really hard, but the overall market is rotating and the S&P is still very close to 52-week highs. In fact, historic.
Yeah, that's exactly almost the scary part. And yeah, thank you for somebody mentioning the 10-year break even. You could use that as well. You tend to see. Well, let's take a look here. So here's Bloomberg uses this a lot to measure inflation expectations. They use the 10-year break even rate, which is basically kind of like what level. Exactly how they calculate it, I'm not 100% sure. It has to do with treasury protected, inflation protected secure treasuries. They call them TIPS. But anyway, this is oftentimes by Bloomberg referred to as the inflation expectations chart. I don't like using it as much. I like seeing the fluctuations in the 10-year treasury because I relate the 10-year treasury more to prices of Bitcoin and stocks as well. But this is sometimes a chart that Bloomberg does use. I'm not an expert in this chart, which maybe is another reason I don't love using it. But yeah, thank you for mentioning it. It is something I can pull up as well. I love watching my fluctuations here. It's very simple and intuitive for me. Maybe I just need to do a little bit more of a deep dive on the break-even 10. But anyway, you've got we're at 1.62 now here, and we should now have the volatility index up. Let's take a peek here. CBOE volatility. There it is. Yep, 14.5%. There's our good little spike here. We are seeing a little bit of a recovery at the moment, not necessarily in the VIX here, but look at Tesla, for example. So Tesla's back at 609 here. Well, I shouldn't say well, but at least about that 2% above some of those crazy lows that we had this morning here in the pre-market, where we were sitting at 580 to that 590 range. Did do some shopping this morning with M1 Finance. So we'll see when exactly those actually go through. But I did put some orders through some of my faves. Usually they go through somewhere around like 637 or so, which it does look like by 637 we were starting to have a little bit of recovery. So we'll see how that worked out. But I've got some cash over at M1 Finance, so that's what I used this morning. You never want to squander a red day, as I like to say. You've actually got Palantir kicking butt right now, and we've gone to a full page of green. So this is nice. We're seeing a good recovery here. We do have that volatility index dropping a little bit here just in the last minute or so here. We've got purple still up about that 7 to 8% here. Palantir doing very, very well, up 7.2% here. Let's take a peek here. Palantir accepts Bitcoin payments, could invest in cryptocurrency. Yeah, wow. Okay, that's interesting. 33 minutes ago, Palantir is tumbling. 17 minutes ago, Palantir accepts Bitcoin, could invest in cryptocurrency. Okay, very interesting. Roblox up 6.33 after smashing earnings yesterday. And that was really on user growth because there was a slight miss on one of the metrics. I want to say it was EPS. I don't 100% remember when we covered the earnings yesterday, but it wasn't all perfect at Roblox, but it's still doing very well on that growth that we're seeing year over year. So what else do we have here? We got AMC just over $10. Very nice. Upwork off that low of that 35 that we saw this morning. Nice recovery here. A lot of sort of dip buying. Kind of good to see. That's, in my opinion, exactly what you're seeing here. You've got Ethereum moving nicely, almost back to 4,000. We've got more green, so that's good. We're actually almost, are we almost at 2 pages here? Yeah, we are. See, go to Tilray here, and we are at 2 pages of green. That's a whole lot better than what we had in pre-market when we literally had, 5 or 6 stocks green. So we're getting a little bit of a recovery. Nice to see. ChargePoint actually green here. Twilio green. Some dip buying. Very nice. We've got PaySafe and Playboy still down at the bottom here, 14 and 11%. Affirm, Virgin Galactic, Hut 8 Mining, Riot, Marathon, these guys still down, but nowhere near the downs that we had. I mean, Riot was down there almost 10%. Now just down 4.75%. Very quick recovery here. Tattooed Chef at 16.51. Matterport sitting right around 11. We've got G-Tech, Redfin, GM, these guys all down about 1.8 here. Tesla, Delta. Look at that recovery really at Tesla. Delta was about 2.5 down, so it's recovering a tiny little bit. But Tesla, if I could click on the darn thing. Okay, I'm just going to type it in because apparently I can't. There we go. Yeah, Tesla got a very, very nice recovery off some of those low levels that we've seen today. I wonder when I'm going to get a notification that my M1 Finance order went through. Let's see here. Oh, okay, there we go. It went through. Yeah, okay. It looks like, yeah, as I thought, it bought somewhere around 37, 637. Yep. So M1 Finance, it's classic. That won't time the open perfectly. I would have preferred that. I would have saved another $10 a share or whatever. Oh well. So definitely did my dip buying, and volatility still obviously up. Let's take a peek here. I want to listen into Bloomberg. I'm going to hop on over to CNBC for a moment to see what they're saying, but I do want to listen to Bloomberg for a moment. Okay, perfect. Fine. Let's get to Bloomberg.
Takes away the mundane tasks.
Are you exactly where you need to be?
No, they're talking about the future of AI. Okay, then let's go over to Barnes. Let's see what they're talking about. Oops, one channel too far. There we go.
But I can,
What do we got?
Oh, life. How?
Oh my gosh. They're all on commercial. Fine, whatever. Let's look at some of the headlines that we've got in the term. So I'm going to go ahead and grab 10-year Treasury dropping a tiny fraction here. A little bit of a rotation down. And again, that's what I like to see. I like to use that. You don't get that sensitivity in the 10-year break even. See, the 10-year break even, you don't get that alignment with stocks as much. Whereas when you go to the 10-year break even, you see, oh, stocks recovering, and you see that you see the 10-year Treasury dipping down a little bit. So that's one of the reasons I've been so magnetically attached to looking at the 10-year. But anyway, let's go ahead and look at top news here. Let's see what they're talking about here. Gas stations run dry as pipeline hack will take days to fix. That's not good. JP Morgan plans to bring UK office back to the office. Tech-fueled sell-off goes global. Tech-led sell-off that started on Wall Street reverberated across the world as worries over inflation pushed investors to dump expensive stocks. Treasury yields edged higher, and the dollar lingered near its weakest level of the year. Nasdaq fell almost 2% at the start of trading. Debate rages over whether the expected jump in price pressures will be enduring enough to force the Fed into tightening. Big debate. Very, very big debate. Got folks on both sides. Nasdaq 100 breaches short-term average as tech-heavy gauge loses 2.16%. Yeah, you've got it breaking what looks like the simple moving average of the 100-day and maybe the 50-day. I don't think if I click on it, anything will happen. I'd really like to add in, but I can't. Oh, there we go. I can. Okay. Yep. There it is. Let's zoom in on that a little bit. It's a good chart. All right, let's get a little zoom in. There we go. Yeah. Okay, touching the 50-day line, not yet breaking the 100-day line on the Nasdaq. Nice, Bloomberg. Good put together. All right, let's go back over here. Let's see what else we have here. So PaySafe and I mean most of these guys moving to the upside, with the exception of Big here. You got Affirm trying to Affirm and C3II though. Those are the two that those have probably had like the worst move here. C3AI, let's look at C3AI. These guys have just been getting destroyed ever since they came public. I mean, there's been like no hope for these two. And it's sad because it just keeps going down and down and down. It's rough. Airbnb, where's Airbnb? 141 for Airbnb. Folks, look at that. Airbnb is touching IPO levels. Actually, on IPO day, we closed at 149 on IPO day. Folks, we are now sub IPO day on Airbnb. Woo! Oh, jeez. That's incredible. All right, what else? What else do we have here? I do want to, let's go ahead and look at some numbers with Palantir. Let me pull it up for a second. One sec here. So, okay, let's look at a Palantir. Let's see here. So Palantir, we have individual company news. Let's take a peek and see what we have. Okay, so Palantir, let's see what the news was with Palantir. Give me a second here. All right, let's see here. So I'm going to scroll down to, can I see the earnings? No, let's see here. Revenue, sees Q2 revenue at 360 million. Consensus was 344. So that's good on revenue. And adjusted free cash flow over 150 mil. That's good. I don't have the EPS figures for it. They kind of escaped me here. These earnings come out so early when they do the morning earnings. Let me just see if I can. Let's just do a quick little search here for those earnings on Palantir. All right, so here we go. Okay, so Palantir reported a 49% revenue growth for its first quarter. We read the expectation already of Bloomberg. We did have, there we go. We matched the EPS. That's why I didn't see it. Matched EPS of 4 cents versus 4 cents expected. Revenue came in at 341 versus the 332 million expected in the survey. So Palantir did well. It matched expectations, which usually when a company matches, you almost see a sell-off afterwards in this market. But we've seen a nice recovery on Palantir on the day here today. Let's go back to the sticks here. Let's see what we got here. So Palantir, Palantir's sitting at about 4% right now. It's still under 20. Did have a substantial fall here at one point. Let me go to the day chart, the minute here. There we go. Yeah, we're at 1931. We did hit as low as 18. What do we hit in pre-market here? Pre-market this morning was nasty. I mean, we hit a moment of like 1635 this morning. That's incredible. We opened around that 1720 this morning. Gee whiz. Dogecoin's almost back over 50 cents. Roblox doing very well, up about 10% right now. We've got, let's see here. There we go. So XL Fleet, Canoe. So some recovery here on towards the green side, which is nice to see. It'll be interesting to see. Are we going to end up going green on like a Tesla today after that very, very short-term dip there? If that ends up being the case. Yeah, look at that. Tesla was down like 4 to 5% this morning. And it's going almost directly to the green direction. I mean, this is really incredible to see. So there we go. All right. Yeah, I mean, this is an incredible recovery here. Matterport kind of stuck, but trying to go flat as well. What's really staying down? Let's look at all stocks here. Staying down is really PaySafe, Affirm, Big Digital, Playboy. Playboy moving from about down 9 to 10% down to about 7% down. But otherwise, we do have a lot of these recovering nicely here. Riot, Marathon recovering. Honest Company, bobbing around that 2.5%. They didn't sell off that bad this morning. Churchill Capital. Let's see how, and here's Coinbase. Coinbase had a great run yesterday. Now it's, where are we now? They're moving so much, it's hard to tell. Coinbase is down 1.78%. We got XBank down 1.65. Let's look at some of the other favorites. Nfib also recovering. I did buy some Nfib this morning, along with some others, some of my other favorites. We got Nfib also recovering nicely here. Should probably see the same on the ARK fund. Yeah, look at that. ARK is almost flat on the day, despite the madness that we saw this morning. Really incredible. Let's listen to what this breaking news is. See if it is even breaking news.
Jolts. Job openings and labor turnover surpassed the 7.5 million job openings and crashed through 8 million. 8,123,000. Wow. This is huge. All these job openings, and the debate rages on as to exactly why we're not filling them, whether it's skills, whether it's benefits, whether it's fear of COVID, whether it's childcare and school issues. I can't tell you the percentages of each, but I can tell you for sure it's part of all those. And this number is certainly going to incite people to continue to kick the tires on some of the stimulative policies, whether the Fed or Uncle Sam, because 8,123,000 openings is a lot of potential jobs for people to take. Morgan, back to you.
Yeah.
It really is interesting. I mean, there's so many businesses desperately looking for workers right now. I don't know where I heard this. Somebody mentioned, I don't know if it was on one of our live interviews or where it was, but somebody mentioned, maybe somebody can verify this in the comments. Somebody mentioned that, McDonald's was paying people to do interviews. Is that a true story? Let's Google that really quick. McDonald's paying for interviews. Yeah, look at that. That's incredible. Business Insider. A Florida McDonald's is paying people $50 just to show up for a job interview, and it's still struggling to find applicants. That's crazy. Interview Monday to Friday, 2 p.m. Get $50 for an interview. Wow. That's it's just powerful. It really shows the economy wants to boom, but we really need those jobs. Let's listen to Bloomberg. Let's see what they got.
Basis points. A sell-off much more pronounced over in Europe, but that's an anomaly. And also euro-dollar now sitting at the highest level since the end of February, not seeing that safety within the dollar trade. So some interesting quirks within the market guide that we'll dissect.
Yeah, like the airline sector's gone up really sharply, which I think is worth bearing in mind as well. So maybe it's just simply a traveling and arriving story. Maybe we're getting to the reopening, to excuse the pun. Jolts data's out. This is color, I think. This is interesting because this is...
We just heard this, but I want to hear their commentary on it briefly.
Friday, that big miss. Why did it happen? Well, here's possibly one explanation. The availability of jobs is super high right now. 8.1.
That's a good comparison. I mean, we just obviously heard the numbers, so we don't have to hear them again. But that's a good comparison. Why did the jobs number miss so horribly last week? And well, maybe it's because nobody's taking all the jobs of the openings that we have. I mean, there's almost that. Look at that. That's like 700. What is that? 600,000? About roughly 600,000 more openings than expected. Which, if you added 600,000 to the April jobs report, and we would have gained 988. Now, it would have been 888,000. That would have been much closer to that million that of job numbers expected. That's the jobs are just going unfilled right now. And a lot of the argument is that it's because of the unemployment boost. And there are a lot of people clamoring for the unemployment boost to get continued. It's kind of interesting how the market is so messy right now.
1,209,000 in March. Now, some of that was filled in, we know, in April, but it does tell you there are a lot of openings out there. And let's check quickly this morning's Nfib report. Small business, the optimism index, 99.8 in April. That was a little bit lower than had been forecast. It was as high as 104.5 in February of 2020 before the pandemic began. But the interesting thing that people are watching is hiring and the amount of inflation that people see. The net percentage reporting an increase in average selling prices rose to 36. That compares to 11 in February 2020. That measure averaged 5. last year. So price pressures are rising. And of course, 44%, we had this number earlier, of the small businesses say they are going to be hiring. They're looking for people, can't find them yet.
Yeah, and quit rate was like 3.5 million quit their jobs in March. Mike, really appreciate it. Thanks a lot. Bloomberg's Michael McKee. Our other top story is what's happening in the vaccine news. The FDA now clearing.
I'm going to pull off this. Let's listen to Tech Tumble, and then we'll go back to the sticks here in a moment.
Mike, thanks for that. Obviously, so much to watch on a pretty interesting open, as we figured it would be a little dramatic given the pre-market. Mike Santoli. Let's continue that conversation with Lou Piantadosi, Eaton Vance Management Vice President and Co-Director of Growth Equity, joins us this morning. Lou, it's a good day to have you. Thank you for the time.
Good morning, Carl. Thanks for having me.
I was just looking at a note here from Morgan Stanley. They say that their unprofitable tech basket, and everybody.
I'm going to just pull down just briefly here. You know, we were on a nice recovery train here. Tesla was to just down 0.7%. Right now, it's back to about down 1.4%. So a little bit of this sort of fluctuation still occurring. We'll go back to the sticks in a moment.
Do you think that's getting a little tired?
I think that the sell-off is justified given the meteoric rise that a lot of these stocks exhibited, particularly post the COVID, initial stages of COVID. And, you know, given where we are right now, I mean, there's 4 real headwinds to most areas of tech, and namely the fear of higher rates, tougher comparisons going forward, particularly to those that have benefited from COVID. Corporate tax reform, which is something that isn't being discussed right now, but it will have an impact on tech more so than other areas of the market. And then lastly, particularly for mega cap tech, I think, you know, we're seeing more and more antitrust headwinds starting to pick up as well. So all of those headwinds, you know, kind of come together at a time when there's other areas of the market that will benefit from a recovering economy that had been neglected by the market for the last few years. And now we're starting to see a real resurgence. So really no surprise here.
It does sound like you think there are areas within tech that are viable on a pullback. And I think you're pointing to semis on that versus others like payments and cloud, where maybe the high valuation means there is a little more downside to come.
Yeah, I think that's exactly right. I think the semis are viable right now. I think the stocks have come in, not as much as some of the others, but the valuation of those companies are much more attractive for kind of a good entry point in some of those names. I like the analog semis the best because they do have leverage to a recovery of the industrial economy. You know, areas like payments, AI, the cloud is still great.
Okay, let's go ahead and go back to the sticks here. Quick reminder that coupon code was extended with that new marketing group while I try to transition to some actually having employees. It's kind of weird going from like no employees to having a bunch of employees. So still trying to figure that out. But anyway, that coupon code for the programs down below on Building Your Wealth was extended. So if you're looking at quite frankly, for like a mental health support group because the market's been so crazy, it's an option for you. But you do get some really freaking amazing lifetime access to lectures. And I keep adding lectures too over time, which I really enjoy doing. Let's go back to the sticks here. We'll have a private live stream in about an hour and 50 minutes as well. Let's see what we got here. We've got PaySafe and Marathon. Down. PaySafe not really recovering as much as the others here. It was down 18% at one point, still down about 13%. Marathon getting beat up more than Riot, but Riot's trying to catch up again here. Riot was just down 4%. Now it's back down to 7% on the downside here. I don't know. These things are moving so much today. They're actually hard to click on. It's kind of annoying. I feel like really slow. I go to click on them and then they move more. It's incredible. But it's pretty bloody in many spaces over here. We're seeing this sort of attempted recovery, but I just wouldn't hold my breath. Like this is, you know, folks are wondering. They're saying like, "Hey, Kevin, when are you going all in on margin again?" No, you know, like to me, sure, we could have this little recovery that we're seeing intraday here or saw intraday. I mean, Tesla was down, what, 5-6% at one point. It did get to down 0.7%, but look at this. Now it's at down 2.2%. So those losses really accelerating again. So you're really getting this vacillation here. I still believe this, that the S&P could be in for a sell-off. Even though we saw big pain this morning, saw recovery over the last 40 minutes. We were recovering over the last 5 minutes, 10 minutes. We've really started kind of trending back down to the downside. I expect that to continue because, folks, nobody's necessarily going to believe the April numbers. And it's not because the April numbers are going to be wrong on CPI, but let me put it this way. The April consumer price inflation data, the CPI data for April, is going to give you insight on consumer prices. But wait a minute, the inflation is really coming from transport costs and input costs. So we have to actually see those costs go up. Companies adjust to the fact that those prices are up and raise the prices, and there's a lag between that. So we could see big inflation over at the manufacturers and transportation, which we did last month. We saw the producer price inflation go up 1% month over month, but CPI only came up 0.5% up month over month. So you wonder if you're going to see that sort of lag in when it actually shows up in CPI. We do expect that the month over month data will be up. By how much is the big question. The year over year data, that'll be up somewhere around 3.5, 3.6%. That'll be the big shocker for headline news, but the number that actually matters is going to be the month over month data. So that's what you want to look at. You want to see the inflationary difference between March and April. And we'll know that tomorrow at 5:30 a.m. And I really expect the market to be very skittish for this data. Last time the CPI data actually impressed us. It was good, because it wasn't very bad. So, we'll see what happens. Let's give CNBC a brief listen here.
Interest brings bargains, and there would be a buy the dip mentality. It doesn't sound like you think that's dead.
Yeah, no, I don't. I mean, it's very hard to gauge where, kind of the momentum is or where the retail investor is going to go. We've seen a big correction in a lot of these retail favorites. And, I feel like that's kind of the point of we've got to make a decision on these stocks. Do we want to stay with them, or is it a buy the dip mentality? And I think retail investors have been getting their hands slapped whenever they do try to buy the dip over the last few months. So, flows are difficult to gauge, but at the end of the day, we're looking at the fundamental value of the business and what we think it is relative to what the market's telling us. So if we're a little bit early, that's okay. If there's a little bit more downside that gets overdone, we're okay with that too. And that's why we kind of ease in along the way during some of these big time corrections.
Nibble, 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 nibble. I actually really agree with that. I really agree with that. Let's take a look at the what do we got here? This is the 10-year right here, 1.62, really stabilizing at this higher level here. A nice uptrend on the week here. So we'll see how this continues. Let's go back, listen in for another minute or so.
Great. Thank you for having me. I appreciate it.
Oh, he's gone.
As we head into a quick break, here is a look at our roadmap for the rest of the hour. Shares of Virgin Black.
Go over here.
He's absolutely right. We'll tell you what else he had to say, including about Elon Musk. Meantime, Teachers Union President Randy Weingarten dodging when asked.
Politics. All right, let's go to Bloomberg.
In the sense that we were not beating the implied moves set out by options. The only exception was in tech, where all the moves that were beat on the options were to the downside. So, for instance, Twitter. So, I think today is very interesting, but I think the options market was signaling that for a little while now.
VIX 2144. Where's that going, Amy?
Yeah, look, I'm watching this VIX number really closely because I think there's this just mental line around 20, right? Where a sub 20 has been kind of this low volatility regime, and then above 20 is not. And I will tell you that when we kind of stayed in this 16, 17 handle for a while there, people were saying, okay, this is it. We're done. We're back to a low vol regime. It's safe now to sell vol. And then you get days like today, and it makes people question whether that's true or not. And, I think if you see kind of these systematic volatility sellers waffle between those trades, that could create a structural bridge for whether or not volatility, goes lower or not.
Hey, Amy, a derivative, no pun intended, of tech.
I want to just mention something as well, just broadly here to everyone. And no, it's not that there's a coupon code down below that's been briefly extended. It's one of the things that I thought was very interesting, and I was talking about this yesterday with a good friend of mine who's also on YouTube. And I was mostly, I was just going to say this was sort of an idea that I had shared. And one of the things I noticed is in 2019, there were a lot of folks talking about how there's going to be this big crash in 2020. And nobody expected the pandemic to come. But there was really no sign of a crash coming in 2019, that it would come in 2020. It was just more of that classic like clickbait where it's kind of like, oh yeah, the big coming crash in 2020. Now, they happen to be right, not for any reason that they believed, but because of, well, the pandemic. Black swan event comes out of nowhere, right? One of the things that's very interesting, though, is their fear about this crash coming. And when the crash started coming, the crash being there, their fear led to two fatal mistakes, in my opinion. Number one, not having been getting into the pattern of buying stocks before the crash, which makes you less likely to buy stocks during the crash. That might sound ironic, but think about it. When you buy stocks before a crash and then things crash, you're like, oh man, these prices are good. I want to buy. You get that temptation to buy more, right? And so when the crash comes, and did in March and April, many of the crashers took the stance of, that's it, we're going for the big summer double dip, and refused to buy anything. Whereas my belief, as somebody who's generally this eternal optimist about the market, my belief was, no, this is great. Buy. I don't really care about these stocks for, for 10, they can do whatever they want for the next 10 years. It doesn't matter to me. My long-term belief is these guys, these are great opportunities. And I thought that difference was fascinating to me, that if you go in fearful of a crash, you don't buy, and you're less likely to buy in the dip. When the crash and the dip happens, if you had been a buyer, you're more likely to buy. And you're more likely to be that person in a year or 2 or 3 or whatever, where people are like, oh man, you were buying during that? Man, good job, man, because those were great prices. And like that person just said, who was on CNBC, hey, keep buying. Sure, you might get your hand slapped, might keep going down, but when you look and you're like, those prices seem really good, those are opportunities to buy. And if it keeps dipping, keep buying. So anyway, let's listen in to Bloomberg again. But I thought that was something that was very interesting to me. It's usually the crashers or the pessimists who just never end up buying. And it's the optimist who, sure, in the short term, you could look like a loser. It's like, oh, Tesla, yeah, Tesla's down from $900. It's at $600. You're a loser. Whatever. That's what people do, man. The day Cathie Wood was down in February, one of the first days she was down, people were going on CNBC talking about how stupid Cathie Wood was. It's so normal. Everyone's an expert at making fun of somebody else when their strategy is temporarily not in favor. But I just laugh it off. Let's jump into Bloomberg here.
Thanks for having me. Look, I would say, bigger picture, that's not the outcome that we expect to play out. What we're seeing in the trend take hold in foreign exchange markets right now is very much what most of our investor base expected coming into 2021. The view was that a broader reflationary environment would lead to a dollar trending lower on back of capped real rates, expanding U.S. deficits, and plenty of dollar liquidity. What we actually encountered was this U.S. exceptionalism narrative, where you had outperformance with respect to vaccine rollouts, outperformance with respect to growth, and obviously that translated into a quick repricing in U.S. rates. And I think really it was the speed of the move in U.S. rates, in addition to the fact that there were some lingering concerns around a Fed policy mistake that underpinned the dollar in the first quarter. So it was really about the dollar providing both an alternative to growth and an option for safety. Now, coming into the second quarter, again, the U.S. data has still been good, but you're starting to see, again, some of the prints come off the highs at the same point that the rest of the world has started to catch up. So the narrative that we're facing now is this idea of U.S. exceptionalism fading a bit. And you're certainly seeing that reflected in the currency markets. And I would say our investors are at the point now that they're getting much more comfortable with the idea of being short the dollar, similar to where they were in the beginning of the year.
But now it's actually playing out. But I guess I wonder what the ECB has to say about that. I mean, you look at euro dollar, like at what point does it just kind of run too much?
Absolutely. That's a great question. Look, we came into the start of the year and there was a very, very bearish outlook around Europe. I think, the vaccine story in Europe was very well known. And the realization coming into the second quarter is that I think the market realized that they got ahead of themselves with respect to that bearish negative narrative. And again, as you've seen the vaccine situation improve, you've certainly seen the currency catch up as well. Now you've seen this repricing in rates in Europe. And again, that's reflective of a better growth story. Going back to what I said earlier, with the US exceptionalism narrative fading, the rest of the world catching up. That's exactly why you're seeing the currency perform.
This is friends in low places. That's actually a good point. We're going to go back to the sticks here. It's actually a really good point. Money talks and bullish walks. You didn't become a multimillionaire by following trends. I am the opposite of a trend follower, and that's sometimes very difficult, especially as a YouTube channel, because I'm very much somebody who buys when it's unpopular to buy. And what's crazy is when things were running, people are like, Kevin, why aren't you buying stocks in Jan, Feb? And then I sold in Feb a good chunk to reduce margin. People are like, why aren't you buying? Everything's going up. Everything's going up. Why aren't you buying? I'm like, this is not the time to buy. I mean, I don't want to pretend like, oh, I knew there was going to be a big crash in February. But yeah, I tend to do exactly the opposite. People are like, oh, I mean, it really started, and I don't want to get like, reminiscent here, but it really started when I got into real estate sales in 2010, 2009, 2010. I would go to Trader Joe's and people would be like, oh, so what do you do? I go, oh, real estate. And they're like, oh, I'm sorry. It's got to be horrible right now. And I'm just thinking in my head, like, this is great. Like nobody's loving real estate right now, but I'm loving it because the numbers were so stupidly good. You could literally borrow 100%. You could borrow, you could put 25% down, borrow the 25% down payment. So borrow everything and have a positive cash flow by a good amount. And I'm like, how could you not like real estate right now? That's insane to say that. And so, yeah, generally I'm very, very contrarian. Now I know in the short term that cannot be so snazzy, because even if you bought real estate in 2010, prices still fell to 2011. But you look back now, if you bought in 9, 10, 11, 12, 13, doesn't matter, you're way up. All right, so what else we have here? How are things doing here? Playboy's back to its about 10% decline, so it's worsened again here. It did recover there briefly to about a 7% decline, but it's fallen again. And Marathon Digital back to about a 10% decline as well. Riot's only at 4.81, actually recovering a little bit. Kind of a divergence in the market here of some stocks. Usually Riot and Marathon are like hanging out together, but no, not liking each other too much today. Do have Macy's down 3.3% here. And what else do we have here? So what else? Okay, these guys are all down about 3% here. Coinbase, Microvision, Simon Property Group, PSAC, what else? GTech. All right, let's scroll down. What's positive? Look at that. BTX all of a sudden as a momentum play just U-turned here. Going straight up. BTX all of a sudden up 16%. This one's been down hard. And so is Big Digital. Big Digital must have hit, when did they hit $1 yet? Yeah, look at that. They broke under $1. And basically, as soon as they broke under $1, which yesterday we were talking about, hey, there's a good chance you might see, this break under $1, and it did. And so, let's see here. Yeah, this bump here is really kind of an incredible bounce right off about that $1 level here. Doge back at about 50 cents, Upwork 3.38. We've got Activision 2.33 to the up. Bitcoin, okay, so a lot more green right now. Still though, Teladog's up a little bit. We got Neo. Look at that. Neo's up, but it's at $34. Oh, it's so cheap right now. How low did it go in pre-market this morning? Oh my gosh. Neo went to $30.56 this morning in the pre-market. Wow. I wouldn't be surprised, honestly, would not be surprised if we revisit some of the numbers that we saw in pre-market this morning. I do think it'll couple with an S&P sell-off, but we'll see. You know, no guarantees. We'll see. So, all right, what else do we have here? I saw Tesla's down still about 2.15%. Very good food companies down about 7%. Affirm down 7.6%. Marathon Digital sitting at that 10. Riot's only at about, what, 4 or 5 now? 5% as a decline. Hut 8 Mining's down, but Big Digital is way up. Redfin 3.75 to the downside. Norwegian Cruise Lines. How have the cruise lines been doing recently? Let's zoom out a little bit. Yeah, look at this sort of up and down here. Really a sideways trading that we've had since January, February. Just sort of rotating within this path here, right? All right, what else do we have? So, all right, looking at some of the comments here. My head hurts. Oh my gosh. Yeah, it's pretty red. But anyway, all right. What else? Let's go ahead and hop on over to Bloomberg. Okay, Bloomberg's on commercial. Fox is on commercial. Get your life insurance in as little as 5 minutes by going to metkevin.com/lemonade or by going to metkevin.com/life.
In April from the previous month. Plus, Reuters reported that Tesla's decided against buying more land next to its Shanghai plant. US-China trade tensions have undercut plans to turn the site into an export hub. Meanwhile, Elon Musk polled Twitter followers on whether Tesla should accept Dogecoin.
Dogecoin?
Guy?
It sounded like Deutschcoin for a moment, which is kind of an interesting, unique way to say it.
I'm probably in the minority here.
You're aging yourself.
It's a dog.
Uh-huh.
Dog eco. Anyway, yeah. So the Tesla Dogecoin thing, I think, is fascinating. Just the power that Elon Musk has over this, I think, is absolutely.
S&P 500 just dropped a little bit.
Op-ed piece about this in terms of the democratic nature on the Bloomberg a little bit earlier on about what's happening with Dogecoin. But Tesla, Alex, Tesla continues to be bundled lower. I get through it.
Yeah, for sure. Friends in low places. I did. I thought that was great. Thank you.
579 is the 200-day moving average. We're just north of 600 right now. It's had an incredible run. But China problems, they're mounting up. Got to get the Berlin plant going. It's all a big issue.
Well, yeah, you got the momentum stocks kind of trading under here. But to your point, China Passenger Car Association said that they saw a 27% drop from March to April in terms of Tesla sales. But I wonder how much of that's also supply if you have chip issues. Anyway, a programming note talking about tech, Bloomberg Technology.
That's what I was wondering too. I didn't vocalize it, but she just did for me. I was wondering, like, is their production down because of the tech, or why are they not buying the extra land? I don't know. What's going on here? They're going to talk about Putin?
Step of saying they're going to take a hands-off approach on this. They're not giving Colonial Pipeline any advice on whether or not to pay or not to pay the ransom. They understand that this is a tricky situation. I talked to Lior Div yesterday. He's a CEO of a firm called Cyber Reason, a cybersecurity firm. He's in Tel Aviv. And he gave me his analysis of why this is such a tricky problem for companies when they're weighing whether or not to pay. Here's what he said.
My recommendation, usually in most of the cases, it's not to pay those groups, because eventually they're going to take this money and they're not just use it as a profit. They're going to use it in order to become better at what they're doing.
Sure.
They're going to keep hacking. So by doing it, basically, we're funding their operation and enable them to basically keep hacking.
And the other question here is, who is this group DarkSide? We saw this statement from them yesterday expressing sort of remorse. It was an odd statement in which they promised to change their ways here. I've been talking to other cybersecurity experts on this group today. One of the pieces of analysis I just got from Karim Hijazi, who's the CEO of Prevaileon, he told me that his guess is that this is a group that has former Russian government employees on the payroll. And the reason is because of just how quickly and how effectively they set up. They came out of nowhere in August of 2020, set up operationally very quick, very effective way of hacking into all of these companies around the world out of nowhere. That lends a lot of people, including Kareem, to suspect that there might be former Russian intelligence or Russian government people involved in this criminal gang, but no one really knows for sure. And so there's a lot of questions here that we're still trying to get some answers to, guys.
Yeah, well, Eamon, on that, what are your expectations, given you've been on this beat for quite some time, that we will actually get some answers? Because it feels like we go from one to the next, and it's never completely clear what just happened because we're dealing with what is happening.
Yeah.
Yeah, and it's never completely clear because the companies don't want you to know, right? I mean, the companies don't want to admit that they're paying these ransoms.
S&P 500, by the way, dropping to its lowest levels right now. Take a look, folks. S&P is continuing to sell off here. We are well below the, well, I shouldn't say well below. We're $1 on the SPY below the open here. And this comes, this candlestick continues to delve lower here. Doge is at about 51 right now. But the S&P 500 is rotating down a little bit more. You can see Marathon down about 12.5. You got Playboy in a worse position now than where it was. You have Lion Electric down to 15.88. Honest Company now down 8.28%. They were down a couple percent this morning, now down substantially more. We have IPOE, Social Capital, down 6%. Microvision down 5.27%. Cheesecake, API, Rocket, Churchill, Xpeng, these guys all down about 4.5%, including Redfin now down about 4.5%. Was in that threes range. Lemonade also down 4%. We are seeing an acceleration here of a Tesla decline also. Not a surprise. Tesla, was down at about 580 this morning. And now we're at about 604 on Tesla, potentially rotating down further. We'll see what happens here. But we are going back down again right now. Yep. We got Matterport under $11 right now. Absolutely steal. We've got Apple down 2.57%. EXPI is down to $25. Everything's brutalized here. Coinbase down at 287. SunPower's down at just $20, $20.97. Cloudflare down, Alphabet down, Enphase down. Enphase and Neo. I'll take a look at Neo here. And Neo also rotating down, despite Kathy Wood discussing some favoritism for Neo subsidies in a video that we actually covered. It was the CNBC interview where she discussed that. But yeah, down 1.86% there on Neo. Ford down 1.92%. Domino's over 400 here. Where'd it go? There it is. Domino's at 424. Nice move by Domino's. Was under 300 for quite a while. Finally back over 400. Etsy 164. Pinterest 57 on Pinterest. Twitter's over at 51. Amazon 31.59. Ubiquity still sitting around that 173, 175 level, sort of rubber banding around there. Palantir giving up some of its gains today at 2.5%, but still green. Early you take any kind of green over red at this point. Volatility sitting at 11.5%. Go ahead and tune in Bloomberg again.
B of A was on a little bit earlier on. He's the head of commodities and derivatives, talking about his call on copper.
So for copper, we're looking at basically $13,000 per ton, and we think we could go as high as $20,000 per ton if the supply of scrap copper, doesn't make it into the market.
Okay.
Just what he's talking about scrap there, just the shortage. Everybody's looking.
Sorry, they're talking about scrap, and I kind of thought Star Wars for a moment that they were collecting scrap. I don't know.
Continuing to see, it's not copper, but it's. Oil, I think, is a different story, but copper and everything else just continues to be pushing higher and higher.
And I feel like there's two parts of that story. Like, one is obviously China, and then the one is decarbonization. The decarbonization copper story is a global story, but things like soybeans that hit $16 a bushel. I mean, I saw that headline cross and my mind went poof, was very much in relation to China in terms of their imports, as well as a drought in Brazil and comes a supply. And all of that kind of wrapped into the certain China-specific commodity story.
Yeah. And it's going to be interesting to see, again, how the inflation narrative works off this.
Mm-hmm.
There's also an Australian angle here, which we haven't talked about yet, but maybe we'll do that a little bit later on. Maybe the Chinese are front-running a shortage in Australian supply. But anyway, producer prices definitely picking up overnight. This is one of the big data points that I think people are increasingly turning to, trying to figure out if you see a pickup in Chinese factory gate inflation, does that ultimately lead towards US CPI increases, and we get CPI tomorrow. Here to try and answer that question, Tom Orlick, chief economist at Bloomberg Economics. Tom, that's the question that I've been trying to figure out. Today's Chinese PPI data, it's super hot. At some point, how does that translate into US CPI?
I think that's the big question, Guy. We've got a 6.8%.
Okay, I'm going to pull off this really quick. I want to see if I can get the commodities chart. I don't know how to do it, but I don't know. One of these lets me know commodities. I want to just see the because they show you the increase in prices, and it's pretty cool. I'll figure it out. I'll figure it out, and I'll get back to you on that. Hold on. Unless somebody knows the Bloomberg code. I want to get it where it shows like what % wheat is up and copper is up and things like that.
And 12 million this year through April. Notable laggards include names that ripped higher last year as we all looked for the products and the tools that would help us learn and work remotely. So video chat with Zoom and text communications with Twilio. Recent tech IPOs are also taking it on the chin. Check out names like Snowflake and Unity and Asana, all down hard from their recent highs.
Yeah.
Palantir, though, actually is a bright spot, now in the green here. Still, though, it's down about 20% just this month. It's down about 60% from its all-time high. Just this morning, Palantir reporting and beating expectations on the top line. Better than expected Q2 revenue guidance as well. Brent Till over at Jefferies says it was a strong report in his opinion, but the street had actually wanted to see even more upside, he says. And Brent does emphasize that Palantir is certainly a unique asset, but it is a pricey one. And that combination, he says, is going to be a tough one in this environment. Carl, back to you.
Mm-hmm.
Josh, it's a great point. It's a big name to watch.
It's true. Out of the stocks I hold, and Palantir is maybe a 2 or 3% now, probably 2.5% position. It is a little pricey. It's kind of like a Square, in my opinion. They're both a little on the pricier side.
Those continue to fall out of favor today, though, as part of that shift from growth to value. Let's start with Affirm. The buy now, pay later company down pretty big today. It's down about 7% right now after earnings. They saw a mixed report last night, and despite growing revenue and payments volume double digits, the company's losses were wider than expected. Affirm also reporting a revenue hit from those Peloton tread recalls. Next, Cathie Wood's ARK Innovation ETF. This has really been a barometer for those high growth tech groups, which is getting hit today as fears of inflation and higher rates creep up. The ETF is down slightly today. Yesterday, the ETF did see its worst performance since March and its 9th negative session out of 10. Meanwhile, Shopify, that's been another huge growth story and a winner during the pandemic. It's down. It was down about 5% today, now down about 3%.
It shows me copper. Thanks for somebody gave me the copper chart. Thank you.
Some big beats on earnings last week. Both companies down today. Square is down more than 10%. And some of those traditional payments names, Visa, MasterCard, American Express, also taking a hit. Amex is a slight outperformer. It was up this morning, but now it is down almost 3%. A different kind of payments play, meanwhile. Crypto exchange Coinbase also getting hit today. But Cathie Wood's ARK Invest coming in to buy the dip, the actively managed ETF, adding 33,000 shares of Coinbase to that fund. And finally, the broader crypto market also cooling off today. Bitcoin, Ethereum, and Dogecoin also lower as some of the risk appetite in the market simmers down. Carl, back to you.
All right, Kate, thank you very much. A bunch of names to watch. And as we go to break, take a look at semis as well, slipping into correction territory. Shares of AMD and Intel both sharply lower for the month of May. The SOX down more than 10% from the April record.
I got it, by the way. Take a look at this. It's GLCO is what I was looking for. Got it. Take a look at this, folks. So this gives us, let's just see if I can make this bigger here. Can I make this bigger? Here, let me launch this out, and then we'll make it larger. Here we go. So this kind of just gives you, it shows you how some of the prices have changed here. So, for example, going from the bottom here, it'll show you wheat, and then watch this. Let me hide myself for a second. Year to date, wheat is up 19%, sugar's up 16%, soybeans up 24%. Look at these numbers; it's insane. Cotton 13%. Corn 59, coffee 14, live cattle 4.8, and these are some big moves up. Steel rebar 41%, copper 33%, heating oil 36%. Gasoline, 50%. These are massive increases in some of these prices. Absolutely insane. Really intense price increases here. So, wow. Yeah, no kidding. All right. Let's see here. So, okay, Marathon accelerating declines again. Riot now almost at 10%. So we're getting more of a sell-off here. That means Churchill Capital is getting to that opening low, potentially even lower here. We are at Tesla. Yeah, see, Tesla's back at 601. It's about to fall below 600 again. Still trending down at the moment. What else do we have here? Peloton, Penn National Gaming, MP Material, Clever, Home Depot, Robinhood. I'm sorry, that's not Robinhood. I keep saying Robinhood when I see RH, but it's Restoration Hardware. But I do catch myself. Wow. Yeah. Beautiful for buying. Terrible for holding. That's the way to look at it. Volatility increasing again at 12.72%. And lots of pain here. Lots and lots of pain. Pain. So, okay. Well, I think we've got a good coverage here. Let's go ahead and quickly look at the 10-year. We haven't done that in a moment, so let's look at that. Yeah, 10 years at 1.62, same spot where it was. All right, folks. Folks, if you like Webull, go to metkevin.com/Webull, deposit $100, get 2 free stocks worth up to $1,850. Check out the programs down below with that briefly extended coupon code to the moon. Eventually, we'll go to the moon. Check that coupon code out. We'll be live in about an hour and 19 minutes in the group. Appreciate you all being here, folks, and we'll see you in the next one. All right.